Okay, it's John. It is time to look at the charts. I'm doing this before the Sunday market open, so I don't know yet how the market's going to open Sunday evening. It's really a fascinating market. So looking at a couple different charts here, we got the reversion bands, we got the squeeze, white background tonight. No particular reason. Sometimes it just kind of makes different things stand out. So the theme here has been kind of look out to the upside, right? So pop, pop, pop. I was looking for kind of see if we could get up to 1275, 1280, and then we got crushed on European news, and then we're right back to almost where we ended up on more European news. So I see something like this, and again, there's just no reason to fight it. I am dying to short this market. I'm itching to short this market. But when I see moves like this is why I keep saying just I'm cautious on the short side. I'm cautious on the short side. For whatever reason, there's a big pent-up demand for assets of any kind, and you just can't fight that. This is going to be really interesting to see where we end the day on Monday. At this point, this is the worst thing that could ever happen for bears. Here we got the collapse. They could load the boat if they'd been shorting into this. Now they're a little bit in the money. Everything looks great. Now they're looking to retest the lows. They're starting to salivate, and bam, they just get completely blindsided here. Okay. Now let's look at a couple of couple more stock markets, and then we'll look at stocks. And this time also the NASDAQ participated. You know, the NASDAQ's been kind of lagging. It's been seeing a lot of selling, but the NASDAQ participated and in fact closed the gap a little bit better than the S&Ps. Okay. So, and then a couple of key stocks, most notably Amazon just still is a laggard here. I'm going to be curious to watch this one. It was up $3. It did kind of same things. The market kind of erased the previous day's losses. But the problem for Amazon just hasn't been able to participate. All right, so that's Amazon. What about Apple? Apple had, decent day, not great by any stretch of the imagination, just kind of hanging out there a little bit. Let's see. Let me look at Google here. As this one comes up. So this one, so Google I actually find fairly fascinating here. Is up $13. It's really leading the way here. You can see it didn't even pull back. I'm actually looking for Google to make a pretty decent breakout here. So all in all, there's really not a lot of reason to head into this next week with a short bias. Okay, and the final kind of nail in the coffin here is that it's triple witching, and it's like 8 times out of 10 triple witching ends up being an up week, and that has a lot to do with just the unwinding of all these huge derivative positions tends to put upward pressure on the market. So I'm looking for an up week, although all the timing cycles and all that kind of fun stuff is actually pointing to lower prices. The odd man out, of course, is going to be news from Europe. Now I've been reading an interesting book this weekend called Boomerang by Michael Lewis. It's a really fascinating book. He toured Iceland, Ireland, Greece, Germany, and then some bankrupt municipalities in the United States. And it really is fascinating, just kind of getting your arms wrapped around what's going on in this current world. And I'm going to do a kind of an extended big picture outlook in kind of a year-end wrap and what to look forward to in 2012 here in the next week or so. And the reality of it is that there's where do I start? But what was interesting, because I did go to Iceland after it blew up, because I actually was curious to see what was going on there, and but it was interesting, just kind of his perspective of it, and I'm going to go into more of it. But essentially, I mean, you have a situation in Europe that is just it's just a looming debacle. And to put it in perspective, you can actually look at what's going on in the U.S. And the U.S. seems like it's in better shape, because what the U.S. is doing is it's not so much a federal government problem, because they can keep pushing it down to the states, which keeps pushing it down to the cities, which pushes it down to each municipality, hence municipal bonds. being in trouble. And what was interesting is that he did a case study about San Jose, and said that the worst, what's the number one worst state in the union right now, and it's California without a doubt. And San Jose, their half of their budget right now, half of their city budget is for pensions, and that's just what's happened. Is a big part of this is that what they're trying to do and what they're trying to fund is pensions for retired workers. And essentially, you work 20 years and you get essentially a full pension for the rest of your life, and people are living longer, and it's just unplanned and underfunded liabilities. So legally, they have to meet those pensions. They have no choice. So what they're doing is they're cutting everything else. So in San Jose, it's like the richest city in America besides New York. They close the library 3 days a week, and they things like this. They cut services so that the pensions can be paid. And that's essentially what's going to happen over the next year or so, is that more and more city services get cut, new government employees get laid off so that the retired workers can get paid. And that's just how the law is set up. And it's kind of fascinating. I'm going to kind of go more into the longer term implications of that and everything. But it's just an interesting mess that we're in. And of course the mess that we're in is going to lead to inevitably things that as traders we can take advantage of. But it's just kind of getting our arms wrapped around what's going on here and what we can do in 2012. And the other part of it too is just the viability of going into fiat currency. How much money do you want to keep in the bank? How safe is it? Do you want to have tangible assets? So that's all stuff that we'll look at. Meantime, though, we want to trade and try to make some money. So that's stocks. So I am actually looking for stocks to head higher. Let's look at the dollar index. Dollar index, kind of interesting here. We're just in quiet mode after this big rally, and yeah, it didn't really react much. This was more, the Europe had kind of good news, so the euro actually had a decent rally, and the dollar just kind of held steady. We do have a squeeze setting up though, and that makes it interesting. Here you can see the last squeeze, and the squeeze before here resulted in some big movements. Taking a look at the euro here, the euro here had a little bit of a bounce back. I would actually love to start shorting the euro on any rallies against this line. You can see it's just bam, bam, bam. I just don't anticipate the euro here having any bounce. So the question is, well, what do you do if there's a squeeze here? Well, if there's a squeeze long, you can certainly push it, ride it, try to ride it longer. But on a situation like this, okay, when I see that there's a squeeze long setting up and we're against resistance, what I do is I let it fire off, try to scalp it long, but then wait for when it starts to run out of momentum. When it starts to run out of momentum, then we can short. So maybe it does stay stuck here, maybe it does consolidate, or maybe it does push up here. That's fine, but once it runs out of momentum, that's the time to pounce on the short side. Let's take a look at gold. Gold here, having a tough time of it. I think I've told you guys this before. I'm very bearish on gold. I am looking for gold to retest not only these lows, but to take them out. And I'll get into that more. I think longer term, gold is a great investment. Don't sell your bullion. In the short term, though, it is in trouble. What about crude oil? Crude oil here, kind of moving with the stock market. That news from Europe knocked it down because of a slowing economy and all that. We do have a squeeze setting up, and I think this is going to be a fairly fascinating market over the next several weeks and months. All right, what about hedge funds? What are they doing? If we look at risk here, risk obviously kind of following along what's going on here. This is what's driving it. So for whatever risk here got annihilated overnight and then soon ripped back higher as soon as the Europe deal was reached. And again, this is a great indicator intraday. If for some reason this breaks out and makes new highs, shorts are dead meat. And what about T-notes? T-notes here did have a real sell-off on the stock market rally, so it wasn't a fake rally. There was definitely some selling in notes here. Another big squeeze. So you're seeing there's a lot of things coming together for December for a lot of volatile markets, a lot of good trading opportunities, and we are going to be hanging on to these and looking for opportunities. I'm trying to think of. Well, I'm trying not to dive into. I'm not trying to dive into the big picture too much here, but let me And with just a parting thought here, and I do think the employment report came out a little bit better than expected, and what's happening there is that people are just falling off the unemployment rolls. So there are people that have just given up, their benefits have expired, et cetera, and they're no longer counted. But the other thing to think about too is the way America is set up. It really is not one big country. It is pockets of economic activity. And one of the things that's also happening right now is, like, I live in Austin, and lots of people are moving to Austin. I've talked to people that have just left their house. They couldn't sell it, and they just came. And if you think of it over the next couple of years, there's a big kind of a seismic shift of what's going on. People are fleeing California. They're fleeing the areas where there's no economic activity and going to areas where there is economic activity, and how that's going to kind of shift the balance of power in the years and decade ahead. Long story short, it's a pretty fascinating time to be kind of looking at all this stuff, seeing how it's going to impact not only us that live here in the United States, but also globally. And I just think the next couple of years is going to be one of the most fascinating times to be trading, to be investing, and we're going to have to be a little quick on our feet, a little nimble, but I think it'll be well worth it for those of us that are prepared and keeping an eye on things. Okay? All right, you guys have a great rest of the weekend, and we'll see you at the next update.